Welcome to the Techno Fundamental Report for February the 15th. Lockout rally. The recent move off the lows has been characteristic of a classic lockout rally. During this lockout period, investors wait for an opportunity to enter the market on a pullback, but that pullback never comes. Instead, demand is so strong that the market moves steadily higher. Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. So the problem we have here is that if you use technical rules, such as not buying an extended pattern, which tends to be a lockout period, because if your rule says that the stock is too extended, then you're locked out. Now, this is an article out of IBD, and it says, in a lockout market rally, patience is key. Now, you may want to, pause your video player and read this whole text here. But basically what this says is eventually the market rally will have a pause or pullback that lasts more than a few days. The pause that took place in late November and early December, followed by an early 2024 retreat, briefly unlocked the market rally, creating a number of new buying opportunities. So the key here is patience. So let's look at an example. Now, NVIDIA is the best example of a lockout. So here's the rule. The rule is we look for a base. Now, it could be a flat base. This is somewhat of a flat base. You got somewhat of a cup and a handle, but a flat base here. And then you got the breakout at 500 on exceptionally high volume. So you got what we call a volume signature. Now, 500, now our rule would be we don't want to pay more than 5% above the breakout price. So the breakout price was at 500. So the rule would be we're just not going to pay more than 525, and the stock's up to 740 approximately. So you can see we got locked out here, and the stock continued to rally. We're waiting for a pullback, but it's just not coming. So the best advice I can give is that because one of the biggest mistakes I've made in my past experiences has been chasing stocks that are extended, and then I get a pullback and I end up stopping out, and it becomes a failed transaction. But in this case, I would wait for another basing pattern. It will base. Patience is the key here. So wait for a new base, and then you get a new buy signal with a volume signature, then you can participate. On the surface, there's no difference between 5,000 and 4,999 on the S&P, but these big round numbers do hold psychological significance for investors. This is Ryan Dietrich, Chief Market Strategist at Carson Group. And he says, as we've seen throughout history, those that are willing to hold during the rough times are usually rewarded in the end. This time was no different. So as we went through that bear market in 2022, it was very important to understand that there would be a reward on the other side, because usually difficult markets are followed by easy markets, and that's what we're getting right now. So in the morning when I get to my office, the first thing I do every morning is I look at 5 indexes. Now here's the NASDAQ. Now what I'm looking for is a constructive looking uptrend. Now the way we have the graph set up, we've got a trend meter at the top. So we want the trend to be in the green, so that means uptrend. We want to see a price action that's in an uptrend, basically above these moving averages. So the second one I would look at would be the mid-cap stocks. Now you can see here, not as good a trend as the NASDAQ, moving sideways actually. Trend meter still showing an uptrend, but it's not as strong as the NASDAQ. New York Stock Exchange, you can see the uptrend. Again, the trend meter is giving us a favorable reading above the moving averages. So that's 3 indexes, of which one is kind of iffy. Now here's the other iffy one. This is the small caps. The small cap indexes are basically have a lot of small banks in there, and that's really what's kind of causing the problem here, because the bank stocks have been, the small bank stocks have pretty much been underperforming the market. So the small caps look iffy. So we've got that index, and then we have the S&P 500, no problem, nice uptrend above the moving averages, trend meter in the green. So most of these indexes are showing favorable positive uptrends. Now, if you look at interest rates for a minute, this is the power index. We've been hearing a lot about the resurgence of inflation and interest rates kind of popping back up in here again. But on the power index, we're still getting readings below zero. So that's telling us that interest rates really are not moving up in an aggressive fashion. So on the trend meters, or whatever trend you're looking at, this is the 200-day moving average, which is a very good trend indicator. In an uptrend on the S&P, also in an uptrend on the NASDAQ. So things continue to look constructive. Aggression index, this is where we're comparing aggressive stocks to defensive stocks. And the aggressive stocks are definitely leading the way here as the aggression index is making new highs. Now, don't be surprised if we don't have some consolidation, but so far so good, not seeing any major sell-off here. The three economic indicators you can see here, interest rates did pop up back above the 200-day. Then we've got oil prices kind of starting to firm up here a little bit, back above the 200-day. And the big banks and the insurance companies continue to look constructive, so no problem there. Kava, this is we'll look at a couple of stocks here. Kava, this is a restaurant chain being run by people from Panera Bread, and also they were involved with Chipotle. The stock has really got a nice uptrend here. It's something other than technology to look at. You got somewhat of a gap up here, buy signal in a steady uptrend. I'm taking a look at it. I just feel like the restaurant industry is just so competitive, but the chart does look good. DraftKings, this is another one that looks good. This is gambling, on sports betting. You can see here the uptrend is pretty well established, holding above the moving averages. Trend meter is in the green, so that continues to look somewhat positive. Now, last but not least, this company is called Monolithic Power. They make power supply systems for the semiconductor, for semiconductors. Now, you can see here a gap up on probably the earnings announcement, gapped up, somewhat consolidating. It's important on a gap up that the stock continue to hold above this low here of the gap up, which would be about 675. So if I were to participate in this stock, I would probably take a shot at it here. If it breaks below 675, I'm probably going to have to sell it because it's going, it's reversing and it looks like a failed breakout. But so far, so good. So if you have any questions, please let me know. Thank you very much.